Ever wonder how the richest people on Earth seem to get richer while paying ridiculously low taxes? It's not a secret. It's a strategy. And today I'm going to break down exactly how it works. Let's look at Jeff Bezos. Between 2014 and 2018, his wealth exploded by $99 billion. His Amazon stock alone jumped from $30 billion to $129 billion. During that same period, he paid $973 million in federal income taxes. Now, that sounds like a huge number, right? But do the math. On $99 billion of wealth growth, that's a tax rate of just 0.98%, less than 1%. To put that in perspective, if you make $60,000 a year, your effective federal tax rate is probably around 10 to 12%. You're paying a rate 10 times higher than Jeff Bezos did on his massive wealth increase, and it gets crazier. In 2007 and 2011, Jeff Bezos paid zero federal income taxes. Nothing, even though he was worth over $18 billion in 2011. He's not alone. In 2018, Elon Musk paid zero federal income taxes while being worth $23 billion. Michael Bloomberg paid an effective rate of just 1.3% between 2014 and 2018. Icahn paid zero in 2016 and 2017. And George Soros paid zero for 3 years straight from 2016 to 2018. This isn't tax evasion. It's not illegal. This is a powerful, legal strategy so embedded in our tax code that the wealthiest people in America use it to avoid paying billions in taxes every single year. It's called buy, borrow, die. This strategy is the main reason why billionaires often pay lower tax rates than their own secretaries. It's fueling wealth inequality and contributing to trillion-dollar government deficits, all while the richest Americans pay next to nothing. So how does it work? Why is it legal? And why can't you use it, even though your tax dollars are essentially subsidizing the very system that protects it? Understanding this isn't just about taxes. It's about seeing how the American system is engineered at a legislative level to funnel wealth upwards, all while maintaining the illusion that everyone pays their fair share. They don't, and the gap is so extreme the real numbers would make you sick. Let me show you exactly how billionaires legally pay zero taxes and why the IRS is powerless to stop them. The buy, borrow, die strategy has 3 simple steps. Step 1 is buy. Billionaires buy assets that appreciate in value over time. We're talking stocks, real estate, art, entire companies, anything that grows in value. This is the foundation of the whole strategy. For example, Jeff Bezos owns hundreds of millions of shares of Amazon stock. Elon Musk owns hundreds of millions of shares of Tesla. As these companies succeed, the value of their shares goes up and their net worth skyrockets. But here's the most important part. Unrealized gains are not taxed. Let's say you buy a stock for $100 and it goes up to $200. You've made a $100 profit. But the IRS doesn't tax that profit until you sell the stock. As long as you hold on to it, that gain is unrealized and you owe zero taxes. This rule applies to everyone. If you have stocks in a brokerage account and they increase in value, you don't pay taxes until you sell. We cash out stocks to buy a house, fund our retirement, or pay for our kids' college. And when we sell, we pay capital gains taxes on the profit, which is typically 15 to 20%. Billionaires almost never sell. They hold on to their assets for their entire lives. And because they never sell, they never realize the gains, so they never have to pay taxes on them. So how do they fund their lavish lifestyles? How do they buy yachts, private jets, and mansions if they never sell their stocks? That brings us to step 2, borrow. Instead of selling their assets and triggering a massive tax bill, billionaires simply borrow money against them. It works like this. Jeff Bezos, with his $100 billion in Amazon stock, goes to a bank like Goldman Sachs and says, "I'd like to borrow $500 million. The bank says, "Absolutely. Just use your Amazon stock as collateral." Bezos gets $500 million in cash. He can spend it on anything he wants. A new mega yacht, a space company, another mansion, you name it. And the most crucial part? Borrowed money is not considered taxable income. Think about that for a second. If you earned $500 million as salary, you pay the top federal income tax rate of 37%, plus state taxes. That's at least $185 million in federal taxes alone. But by borrowing that same $500 million against his stock, Bezos pays zero income tax. It's a loan, not income. And here's where it gets even better for the billionaire. The interest rate on these loans is incredibly low, maybe 2%. Meanwhile, the asset he's borrowing against his Amazon stock is likely growing at a much faster rate, say 15% per year. So he's effectively making a 13% profit while living off tax-free borrowed money. This practice is called securities-backed lending, and it's a standard service offered by every major bank to their ultra-high net worth clients. You typically need at least $10 to $50 million in assets to even get in the door. For everyone else, it's not an option. So Bezos lives off his $500 million loan for a few years. When he needs more cash, he just goes back to the bank and borrows another $500 million, still no taxes. He doesn't even have to pay back the original loan. He can just roll it over or refinance it. The banks are perfectly happy with this arrangement because the collateral his stock keeps increasing in value, making the loan incredibly secure. The bank is happy, Bezos is happy, and the only loser is the U.S. Treasury, which collects nothing. But wait a minute. What happens when he dies? Surely someone has to pay back all those loans and the taxes on all that growth, right? This is where the final and most magical step comes in. Die. When a billionaire passes away, a special provision in the tax code called the step-up in basis kicks in. Let's break it down. Imagine Jeff Bezos originally acquired his Amazon stock back in 1997 for pennies a share. Let's say his cost basis, what he paid for it, is just $1 per share. Today, that same stock is worth around $180 per share. If he were to sell it, he would owe capital gains tax on that $179 profit per share. But remember, he never sells. He borrows against it his whole life, then he dies. When his heirs inherit the stock, the IRS essentially pretends that all of the gains accumulated during his lifetime never happened. The cost basis of the stock is stepped up to its current market value at the time of death. So, the stock that was originally worth $1 is now treated as if his heirs bought it for $180. That $179 of appreciation on each share is completely erased for tax purposes. If his heirs then sell the stock for $180 per share, they pay zero capital gains tax because, on paper, there's no gain. The entire fortune, built over decades, is passed on completely tax-free. And what about those billions of dollars in loans he took out? His heirs can simply sell a small fraction of the inherited stock to pay off the debt. Since they just inherited it at the stepped-up basis, they sell it with little to no tax liability. Or they can just take out new loans themselves and continue the cycle indefinitely. The end result is astounding. A billionaire lives an incredible lifestyle for decades, pays almost no income tax, and then passes on their entire fortune to their children tax-free, by appreciating assets. Borrow against them tax-free, die and have the tax liability erased for your heirs. It is the most powerful tax avoidance strategy ever created, and it is 100% legal. This isn't a loophole. It's a feature of the system, designed by lobbyists and protected by politicians. Thanks for watching. If this blew your mind, hit that subscribe button to learn more about how money really works.